After analyzing over 200 construction companies' financials this year, I was shocked to discover that the average contractor is losing between 12 and 25% of their potential profit through these hidden leaks. I don't want to sound dramatic, but you know what makes me very sad? Watching hardworking contractors like you leave thousands of dollars on the table every month. I'm talking about real money that you've earned but never collected. I remember reviewing a contractor's books and found $147,000 of unbilled work. That's the dollars that should have been in his bank account. And here's the thing, your business probably has the same hidden profit leaks right now. Just last month, I worked with a remodeling contractor who was convinced his business was running efficiently. Within just 2 hours of reviewing his books, we discovered $23,000 in unbilled changes and $15,000 in mislocated expenses just for the previous quarter. Today, I'm pulling back the curtain on the 5 biggest profit leaks I see in construction businesses. And more importantly, I am showing you exactly how to fix them. What makes these leaks particularly dangerous is that they're often invisible in your day-to-day operations. Think of it like ultimate silent killers of construction businesses, gradually draining your profits while you're focused on getting the work done. There's nothing complicated about these. They're simple fixes that can put thousands back in your pocket starting this week, should you choose to implement them. Let's dive in and find your missing money. Profit leak number 1, messy bookkeeping. Yes, we're starting with bookkeeping. Before we get into the specific, here's a fact. In my experience, 78% of contractors are making at least 3 major bookkeeping mistakes that directly impact their bottom line. So let's start with a leak that's probably costing you thousands right now. I know, you hate paperwork, but here's what messy books are actually costing you. Consider this real example. A contractor I worked with last summer was not writing off nearly $55,000 annually in lost receipts and undocumented expenses. That's like giving away a new truck every year. Think about your last project. You probably have receipts stuffed in your truck's glove department that you used your personal card on by mistake. Maybe materials charged to the wrong jobs and expenses recorded to equity and other incorrect accounts. Let's do some quick math. That $200 fuel receipt you forgot to add to the expenses for the job, that's gone. The 3 receipts to Home Depot where you bought materials for multiple jobs but charged them all to your personal card, that's easily another $1,500 in mislocated costs. Those 4 hours your crew spent on extra work that never made it to profit and loss and got recorded to owner draw by mistake, another $400 down the drain. Talking about tax implications, poor bookkeeping isn't just about lost revenue, it's about missed deductions. I recently helped a contractor identify over $12,000 in deductible expenses that he would have missed due to disorganized records. Now, the problem gets worse when you're running multiple jobs at the same time. One of my clients was accidentally charging materials from his high-end renovation to his budget-friendly project, completely destroying his profit margins on both jobs. Here's how to plug this leak. Set up a simple system where every receipt, every invoice, every expense gets logged daily, not weekly, not monthly, daily. Use your phone to snap pictures of receipts the moment you get them. Create separate folders for each project, even if it's just a digital folder on your phone. I highly recommend using what I call the 2-minute rule. If it takes less than 2 minutes to record an expense, do it immediately. This simple habit alone helped my clients recover an additional $2,300 in billable expenses in just 1 month. Especially if you are a cost-plus contract company, you must have all the costs of each phase of the project accounted for before you invoice the client. If you miss any of those expenses, they would come out of your pocket. Imagine this, you lose $27,000 on a cost-plus project because you failed to track and bill for multiple small material runs and crew overtime hours. And to make it even worse, your client had already closed out the project when these expenses surfaced. Can you imagine yourself saying, oh yeah, sorry, I forgot to bill you for these extra expenses a week later? Another thing accurate bookkeeping helps with is staying on top of your invoicing. Even with the small projects like plumbing maintenance, it is so easy to spot which clients you need to invoice, and you have to bill fast and bill often to make sure that your cash flow is not going to suffer. Here's a powerful strategy. Implement what I call Friday financial reviews. Spend just 30 minutes every Friday reviewing unbilled expenses and preparing invoices. One contractor who adopted that practice improved his cash flow by $15,000 per month simply by invoicing more promptly. Profit leak number 2, improper job costing. Here's an eye-opening statistic. 67% of contractors I've audited underestimate their true job costs by at least 22%. That's nearly a quarter of your costs invisible to your pricing structure. This leak is sneaky because you might think you're tracking costs correctly, but I guarantee you are missing important elements. Here's what's really happening on your jobs right now. Just last week, I reviewed a contractor's books who thought he was making 25% profit on his jobs. After proper job costing analysis, his actual profit margins were 8%. The difference? All these hidden costs we're about to discuss. You're probably tracking obvious costs, materials, direct labor, subcontractors, but what about wear and tear on your equipment, fuel costs to travel to the sites, time spent ordering materials, hours spent on project coordination, insurance costs per project? Let's put some numbers to this. Say you're running a $50,000 kitchen remodel. You factored in $30,000 for materials and labor, but you're missing $400 in fuel, $1,200 in project management time, $600 in insurance allocation. That's $2,200 in costs you're not accounting for. Multiply that by 12 projects a year, you're looking at $26,400 in uncaptured costs eating into your profit margin. I know, it's mind-blowing, isn't it? To put this in perspective, I guarantee you that after implementing proper job costing, your net profit can increase by at least 18% without even raising your prices. So to sum it up, when you don't capture these costs accurately, you are not just losing money on current projects, you're underbidding future work because your historical cost data is incorrect. Profit leak number 3, missing change orders. This is the biggest profit killer I see. You are on a job, the client asks for one small change, and you say, sure, no problem. Fast forward to the end of the project, and those small changes have eaten up your entire profit margin. The psychology behind this is fascinating. Contractors often avoid documenting small changes because they don't want to seem difficult or stingy with the client. But here's the truth. Professional builders document everything, and clients respect this level of organization. Here's what you need to start doing today. Every single change, no matter how small, gets documented and priced immediately, not at the end of the day, not at the end of the week, immediately. Better off, the change order is not even implemented until the change order contract is signed by the client and paid for. Let's say a client wants to add 2 more lights during the renovation. Seems minor, right? But let's break it down. Materials, $100. Labor, 2 hours at $75 is about $150. Electrical subcontractor markup, $75. Your overhead and profit, $125. That's $450. Now multiply this by the dozens of small changes that happen on every project. You are leaving thousands on the table by not capturing these immediately. Profit leak number 4, poor time tracking. You might think you know where your crew's time is going, but I guarantee you're missing at least 15% of billable hours. Contractors can lose a lot of money when staff isn't managed well or tracked properly. If the right number of workers isn't assigned or they're not doing tasks that match their skills, costs can quickly add up. Poor time tracking can also cause delays and missed deadlines, and even penalties, not to mention making it harder to estimate costs for future projects. And on top of that, untracked idle time, payroll mistakes, and forgotten billable hours can eat away at profits. Over time, these issues can hurt your reputation and make it harder to land new jobs. So the good news is that you're using time tracking tools, keeping an eye on productivity and holding workers accountable. That can make a huge difference. Profit leak number 5, incorrect markup calculations. This is where the math gets real. In my analysis of construction business failures, 42% of bankruptcies could be traced back to incorrect markup calculations that led to underpricing. Here's where most contractors really hurt themselves. You're probably using a standard markup percentage without actually calculating what you need to cover your overhead and your profit targets. Stop using industry standard markups. They don't account for your specific business costs. Let's calculate your real numbers. If your annual overhead is $200,000 and you're doing $1 million in revenue, you need to account for at least 20% of your markup just to cover overhead. Add in your desired profit margin at 15%, and suddenly that standard 25% markup isn't nearly enough. Here's how to fix this. Calculate your true overhead cost per labor hour. Include everything: office expenses, vehicle costs, insurance, tools and equipment, administrative salaries, marketing costs. Now add your target profit margin. This gives you your required markup percentage. I bet it's higher than what you're currently charging. And don't forget that markup and margin are two different things. And the fact that you would apply a 25% markup will not give you 25% margins at the end. These 5 weeks might seem small individually, but together they're probably costing you $50,000 to $100,000 per year in lost profit. The good news, they're all fixable starting today. Pick one leak to focus on this week, set up proper time tracking, start documenting every change order, or review your markup calculations. And remember, this isn't about working harder, it's about capturing the money you've already earned. So start plugging these leaks today. today and watch your profit margins grow. Hit that subscribe button for more practical tips on running a profitable construction business. See you in the next one.